Hi, this is Dave, and welcome to the weekly market recap, closing out the week for Friday, August the 9th, 2013. So I've been on holidays all week. I'm just taking a look at the markets now. Let me actually jump over to the Dow futures, starting out as we usually do, and just jump right into this. So I haven't been trading at all this week. I'm just kind of taking a fresh look at the markets and looking to see what might be setting up. So if we look at the Dow futures, and I believe in last week's video we were talking about, we're breaking to new highs, and the body of evidence is just pointing higher, even though we're statistically overdone on momentum. So you just have to expect higher prices. So no sooner did I say that than we initiated probably a 1, 2, 3, 4, 5-day pullback. Back down into some support levels. So I'm still net bullish on this market. It's pretty normal for the markets to, push higher and then pull back. At this point in time, what I'd be looking at is, if you look at where momentum, we were overbought here. Now momentum, you've got momentum coming back down to some more logical levels. I'm really looking for a situation, like this, or like this to take place into a support level. So essentially what I'd like to see is I'm not really interested in the short side of this market, because we are, even though we're putting in technical divergences, like for example here, with price going higher and momentum on my trending indicator going lower, that's essentially a technical divergence. What I'd really like to see happen is, or not what I'd like to see, what I'm expecting to have happen, or where I'm kind of leaning towards is, you've got this low in place, you've got this high in place. 50% retracement would take you all the way down to, between 14,900 and 15,000. But essentially what I'm looking for is, I'm looking to see where where price is essentially going to sell off to, and then look to see if momentum's going to bottom, and then see if we roll back to the high side. So that's essentially what I'm looking for. I don't like to counter trend trade these markets. What I'd really like to do is see something like this happen into some key support level or key support zone. Let's say even, the 382 is going to be somewhere up here. We might not get a deep pullback as deep as, these levels here around 14.9 or 15,000. Let's say we get a pullback into the 38.2% retracement, and then momentum bottoms and then rolls back up to the high side. That's sort of where I'd look at, the zone to hold, and then look for a retest to the highs and see if we can, even go higher. Now, what would change my mind? What would essentially change my mind is if we, the market structure essentially changes from the situation where we're putting in, higher lows and higher highs, to if we start stair-stepping, downwards. So in that case, what I'd be looking for would be a break of a trend line for it to come back up through that trend line. So at this point in time, I don't think we have the makings of any kind of trend changes. We may experience a deeper pullback, or we've already had 3 to 5 days pullback. We might actually hold this level and push off to the high side. So this is a really tricky market. You've got a lot of people on holidays. You've got a lot essentially of non-activity, which is typical for this time of the year from a seasonal standpoint. So for me, I'd be comfortable just standing back and looking to see how this market unfolds. But if push come to shove, I'd want to stay on the long side, but I'd want to see a good support level get hit. I'd want to see it hold, and I'd want to see let momentum take you back to the high side. So I hope that makes sense. I've been off work for a week or two here, so the brain isn't fully in work mode, but I'm just sort of easing back into it. So I hope that all makes sense. Looking at the S&P futures, same sort of scenario, except with the S&P futures we held the 21 exponential moving average, but we tested it for 3 days. So I think that same sort of scenario is in effect. The same analysis actually, I think, is in effect. You've got, technical divergences here between price and momentum, and I think you've got the same. You can look at this market the same way. The S&P looks a little bit stronger from a chart pattern perspective. Let's look at the NASDAQ futures. So the NASDAQ futures look even stronger from a chart analysis perspective. We failed to put in a higher high here. We could potentially expect, some prices, to come back into the 21 exponential moving average, potentially. Unless it holds the 8 and pushes off, I really don't know. I don't really have a strong bias on this market at this point in time. So I think you really have to stay nimble, and you have to look at this on a day-by-day basis and see, what's shaping up, because the analysis can change from one day to the next. So let's take a look at the IWM, which tracks the Russell. And, it came right into the 21 exponential moving average, and it's holding those levels. I don't really have much to say there. Let's look at the transports, see if those are giving us some kind of a heads up. No, not really. They look very much the same. You've got, you've got sort of this minor trend line going, but nothing really clean here. And then you've got this sort of minor channel. Nothing really clean here, nothing to really comment about. Let's take a look at some other markets. Actually, let's look at Apple first before we move on. So I believe we were talking about Apple in last week's video, testing 470. Interestingly enough, we came right into 470 and we sold off. So what I'd like to see for Apple here is we've got the makings of a couple of different patterns taking place here. We have the makings of a potential, it's a sloppy sort of reverse head and shoulders. It's sort of a complex bottom. You've got a double bottom in play here. And the question is, are you going to get above, 470, let's call it 471, and push back to the high side? So what I like here is we've got a higher low in place. We're looking to put in the second higher low. And I think what makes sense would be for it to come back and test that trend line. So let me actually just extend this trend line. Let me extend it right. So we'll move back into where this 21 exponential moving average meets this trend line would make sense. And then if we could get a push back up, this sort of scenario here. Let me actually draw it. Sometimes a picture's worth 1,000 words. So you get this sort of scenario, you hold, and then you push back up above this level. Then I'd be really looking for, move into, 530, let's say, to 550. So that's sort of what I'm looking at if this scenario plays out. And of course, that is going to mainly depend on, what the stock indices in general, what they decide to do. I mean, are we going to get a deeper pullback, or are we going to push back to the high side? At this point in time, there's really no clear indication. So again, I hope that makes sense. Let's look at some key currencies. Let's look at the dollar index. So the dollar index, it didn't hold this zone as I was expecting, and it looks like it's going to come back down and push down into the this low. I like this area here because we've been sort of sideways. This is the logical support. Momentum is sort of bottoming around here. So if we could push back to the high side off of somewhere in this support zone back to the high side, then I think that level, I'm looking at that level potentially holding. So let's take a look at the, let me just log this out for a second. Okay, let's, apologies. Let me take a look at the euro to sort of counterbalance this analysis. And the euro came right back up. Delete some of these fibs, we don't really need them. So the euro came right back up and tested the highs. And if you look at where the highs are here, you can see that we've almost come up and tested those highs. Momentum is sort of topped out in the short term. So I'm looking at this as a pretty decent resistance level. I don't think we're going to push right above that, but stranger things could happen. At this point in time, you've just got to treat this as a really wide range, and that's basically how I'm looking at that. Let's take a look at the USD CAD. So I was expecting a move, off of the support level all the way back up to the high side, all the way back up to retest these highs and potentially go into 108. And all we really did here was we started to push back up off of the support zone, and then we just sort of crapped out, and now we're back down into that support zone. So I really don't know what to think of that. But at this point in time, if we break 102.4, which is this low, then I would expect a move into that trend line. Wherever the price touches that trend line, that's what I'd be looking at. These markets are a little bit. There's not a lot of really conviction in these markets right now. They're starting to become really sloppy and choppy. Which is valid for this time of year. We might just be going into a sideways consolidatory. Is that the right word? Consolidatory phase in the market where we really potentially shouldn't be looking for any type of trending because we don't have any kind of impetus or any kind of catalyst to push it out of the ranges. So that's another possibility that we have to look at, is that we could just be entering into sideways consolidatory phase of the market. So let me flip through a couple of other charts. That's the USD CAD. Let's look at some of the metals. Let's look at gold. And I'm going to have to start cleaning up some of these charts here. So gold pulled back down into 1282. That was a level that we had talked about a little bit going back, just above the 50% retracement of that last move. I think really where the rubber's going to meet the road here is if we can break back up above this minor trend line. So if we can get, I'm actually going to move, I'm actually going to delete that trend line. I'm going to draw a new trend line here. I'm expecting that to be a potential, that's a more sustainable angle of ascent. And now we've got a sort of sloppy triangle forming. If we can break back up above this minor downtrend line, then what I'd really be looking for is for that, potentially to push into 1380. I hope that makes sense. Let's look at the silver. Okay. So essentially this is what silver has done. So let me redraw these fibs and let me delete this trend line. But this is essentially what I was talking about in the gold. You can see here silver's actually looking like it's acting from a chart analysis perspective stronger than the gold. And if we redraw this trend line here, which is a more sustainable trend line, you've got this sort of triangle pattern off of these lows and off of this bottom, and you can see it push back up above this trend line. So I would expect a test of potentially $22 per ounce, somewhere around this level, somewhere in and around this sort of cluster or that that key level there. So that's essentially what I'm expecting now that we've broken out of that pattern. And I think if gold follows suit, we'd be looking at a similar pattern, a similar scenario. Let me just draw some fibs in here. I want to see how deep the pullback was off of that minor level. So you can see the low, the high, we went right into that 50 to 61.8% retracement zone. So this technically to me makes a lot of sense. So it seems like silver's following some technical guidelines. Let's take a look at copper just to see what's happening. And it seems like copper is probably the strongest out of all these metals from a chart analysis perspective. You can see this divergence from the price action from this low to that low and momentum going higher. That technical divergence played out, and you've got a break above this trend line, and we're just we're kind of momentum back into some of these higher levels, potentially 339 to 349 in the copper. Potentially that's what I'd be looking at. So that that bodes well for gold. if we can keep up that momentum there. Let's take a look at the crude oil. So crude oil has been a little bit tenuous. It's been a little bit tricky. We didn't get through 108.73. We came back down to support. Now we're just sort of going sideways. I would treat this as a kind of as a dead zone in terms of, now we're in this range. We really need to break out of that box in order to see any real trending take place, in either direction. So my preference would be, because my trending indicator's higher, we've got a series of higher highs and higher lows in place. My preference would be for this to be consolidation and a breakout to the high side to test some of those levels, 110 to 115 that we've been talking about. Now, don't get me wrong, I don't want oil higher from the perspective of having to pay more at the pump, but just looking at this without any sort of bias on the instrument being traded from a chart analysis perspective, that would make the most sense to me, for it to just do this, consolidate, and then break back out to the high side. That to me would present the easiest trading scenario from a chart analysis perspective. I personally don't really want to see oil and gas higher, because we'll be paying more at the pump, but a chart is a chart is a chart, and that's what makes the most sense to me. Let's take a look at the NG, the natural gas. So we came right back into that low. I don't like this in terms of a breakdown for a short, because momentum is bottomed. So from a timing perspective, what makes sense to me and what I actually like for a potential trade, I don't know that I will trade it because natural gas scares the bejeebies out of me, but looking at this as a potential trading candidate from a chart analysis perspective, I like that momentum is bottomed off of a key support level. And, we had this sort of hammer off of the bottom. This is an area of accumulation. We did have a small pickup in volume, above the average volume. I like that. To me, that looks like a bit of a flush out. And if we can get momentum pushing back up above, back to the high side, then I would like this as a potential tradable area with defined risk below the lows and a potential push back up to the high side, maybe even as high as, that trend line, but, or at least, somewhere into $3.52. So I'm not really negative on the natural gas. I like this as a potential support area, and that's something I'll be watching. I'm not sure that I'll trade it, but I probably will look at it going into next week when I get back back to the daily grind of work. I call it a grind. I enjoy what I'm doing, so it's not really a grind. Let's move on to some other instruments. I hope that analysis makes sense, by the way. If not, feel free, if you have any questions, to send me an email at any time. I'll leave my email address at the end of this video. In the meantime, let's look at the 30-year bond. I was just talking to one of our trading members about this instrument, and another site that he belongs to was looking at potential long in the bonds. Now, this is something that I believe I covered in last week's video, where the bonds look negative, but if you look at some of the higher time frames, there were some cautionary signs there on the weekly chart that might actually be a strong level of support coming in, and a potentially tradable level. So if we look at the evidence here, it looks like now, and I believe I'd have to go back to last week's video, but I believe I discussed this last week. But we were looking at, here's a low. Here is, we went a little bit lower, but essentially this looks like, I'm going to call it a 2 times. This looks like a double bottom from on the daily chart. And if you look at, we had a slightly lower low here on the second test. Let me just delete this. We had a slightly lower low here, and if you look at like our stochastics and my trending indicator, and if you look at the MACD, you've got total divergences in all of these trending indicators, or these momentum indicators rather, and off of this low. So this is a potential heads up and a cautionary sign that this might not be an area to look at shorting. This actually might be a level that you want to avoid on the short side. Not necessarily traded on the long side, although it could be, depending on your trading rules. But this is definitely a cautionary sign. And then if you look at, from a divergence standpoint, and then if we go over to the weekly chart of this same instrument, let me just change this to the weekly chart. You can see that, momentum, you've got a sort of longer term trend line coming into play around the same level. And you can see that momentum is sort of bottoming here on the slow stochastic. That is also a cautionary sign, where you don't really necessarily want to look at, trying to get any downside off of a support level with momentum already bottoming. So that's more of a cautionary sign. I don't know that it's necessarily tradable, although you probably could have grabbed a decent move off of the bottom there. I don't know how high it will go, but if I could hazard a guess, oops. Okay, my apologies. Let me just switch over to the daily chart again. Sorry, I just had a bit of a hitting the wrong buttons there. And if we go back to the daily chart, let me delete some of these fibs. I should probably keep them on. Essentially, what I'm looking at is I'm looking at this level here. I think you're going to have some pretty strong resistance at around 137. Where we found support and then we broke through pretty decisively. I think this is going to be a challenge point, 137 in 26-30 seconds. I think ultimately you've got really strong resistance between 139 and 142. So, if we get a strong move back to the high side, we could potentially come all the way into, 140-ish. But I think 137 is going to be a pretty major sticking point, a pretty major challenge point. You can see momentum. You've got the divergence. You didn't come all the way down to the 20, and now momentum's pushing back up to the high side. So what I would be looking at, and something I discussed with one of my members today, and is that essentially I'd be looking to see where the resistance comes in and where the momentum starts to top out to see maybe where it's potentially where the bonds are going to fail on the daily chart time frame. So I hope that makes sense. And let's just take a quick look at the 10-year to see if we've got any kind of confluence between those instruments. So the 10-year actually put in a lower high. It broke this trend line, and we've got the 10-year looks a little bit stronger from a chart analysis perspective, and we have the makings of a pushback into some of these resistance levels, potentially even as high as 128 on the 10-year. So that to me, they're kind of moving in lockstep, and that makes sense to me. So are there any instruments that we haven't covered that maybe we should take a look at? I don't think so. I may have overlooked one or two things, but I think substantially I've looked at everything that I really want to look at. I'm going to wrap this video up. Have this should be a nice weekend. Try and spend some time outside and with your families. Get away from the screens. I'm going to be back to work full-time on Monday, so I'll be a little bit more, immersed again in the markets and, looking to implement my master trading plan that I've been working on for the last 2 months or so, and getting back into things in a bigger way, provided, the market's willing to give. If the markets are quiet, I'll use that time, to tighten things up and for, more research, and be patient for, decent moves to come along. I don't want to just jump into the markets now that I have, jump back into the markets now that I have my plan in a better state, if the market's not really willing to give me what I'm looking for. So, plan plus market conditions equals, higher probability of success. So I hope that all makes sense. I'm just going to drop my email in here in case you have any questions. Feel free to ping me at dave@markettradingconcepts.com. If you have any questions, or if there's anything you want me to look at in an upcoming video from an analysis and commentary perspective. Hope that helps. Have a fantastic rest of the weekend. Good trading and all the best. Bye for now.